Okay. Hello, everyone. Welcome back. I'm so delighted to have my friend and ally, Marco, joining me again to continue where we left off in our last interview. Marco's got some amazing points to bring into our awareness today. And we're going to pick up and look back a little bit of a recap on SHIBA Inu. So take it away, Marco.
Thanks for having me back on again, Ashala. And yeah, it's good to be back. And yeah, as I said before, I thought it'd be a good idea to just start off with a bit of a quick recap of SHIBA since everyone's so interested in it. And we've got this interesting tweet here from the CEO of AMC Theatres. And he's just announced a few days ago that AMC Theatres is going to be accepting SHIBA Inu as a form of payment when you go to the cinemas there. So the timing for that is like about 60 to 120 days away. And okay. Yeah, it looks like people are taking this meme coin a lot more seriously than what it was originally intended to be taken. So
okay, so how do you feel about that, Marco? How does that land?
Well, I think the whole project. Well, sometimes these meme coins, they start off as a joke, but they end up turning into serious projects. And Dogecoin, which is like the big brother of SHIBA, is gone the same way. It's a top 10 cryptocurrency now. So if you go to CoinMarketCap or CoinGecko, which is which are the top two websites people go to research cryptocurrency, you'll see that they're in the top. Dogecoin is in the top 10, and that started off as a meme coin as well. And one of the things that's interesting about these meme coins, the reason why they're like a bit of a joke coin is because one of these tokens would be like 1/10,000th of a cent in value. So the whole joke is you could buy you could become a billionaire buying SHIBA or Dogecoin quite easily, okay? But really on paper, you're only worth like about $100 or $10 or something like that.
Yes. So it's really getting into that the excitement of playing the game in that way.
That's exactly right. Yeah.
Clearly, it has moved us in a direction where these larger corporations are taking this stuff seriously. So I'm excited about that.
Yes, that's something I'm very excited about as well. And it's a very interesting space, cryptocurrency. That's why I've decided to go a little bit further into it with you today, and for your audience. And there were a few things that we couldn't quite get into and cover as well as what I would have liked in the space of an hour. And one of the things I want to talk about with you today and your audience today is just like past trends, current trends, and future trends of cryptocurrency. And it's one of the past trends have been it's like decentralized finance. Okay, so that's like finance in the blockchain for lack of a better word. It's probably the simplest way to put it. Okay, so you can loan your cryptocurrency out instead of just leaving it in your wallet and make a bit of money out of it without having to worry about the risk of trading as much. And what we're looking at here on the screen now is are the top decentralized exchanges. Okay, so they're like Coinbase, but they're totally decentralized and they're on the blockchain. And a lot of these decentralized exchanges, not only can you buy tokens like SHIBA Inu and stuff like that on there, you can also do decentralized finance.
Okay.
So that was a big trend about it's like 6 months, a year ago. It's really exploded. It's cooled down quite a lot now, but it's still a space that's worth looking at and getting into. One of the current trends.
Tell me, Marco, can you tell me what would be the benefit of that? I mean, obviously you're making interest on your finance portfolio.
That's a very good question. Yeah. Well, I have clients that it's like I help in this space. I don't offer investment advice, so that's one thing that I need to make clear right at the outset. This is not investment advice. These are just what we're trying to do here is trying to give you an explanation about what the space is like and where it might be going. So
Yes.
don't take anything I'm putting up on the screen as a possible thing for you to go out and buy. But going back to what you were saying before, it's like one of my clients is got a bit of a risky idea. It's like in Australia we have superannuation, which in the US would be called a 401k, where you're funding your own retirement, for lack of a better word. And he's looking at the interest rates he's getting on there, and he's thinking, you know what, it's not that great. I'm making hardly any money out of this. I want to be able to retire, and have like a half decent income when I retire. So he's looking into getting to decentralized finance a lot more. Okay. And what he's doing is like he's staking, and he's also doing liquidity mining, just like help get some passive income going.
Now we're going to be talking about staking and liquidity mining here shortly. Is that correct?
Yes, that's correct. We're going to get into that after I get past these next two topics.
Okay.
But yeah, so there's lots of very interesting things you can do with decentralized finance. Now, one of the current trends that I want to look at is like our NFTs. Okay, so what an NFT is, it's a non-fungible
what does it stand for?
Yeah, it stands for non-fungible token. So you hear these terms quite a lot in cryptos, like when people are talking about fungible tokens and non-fungible tokens. Anything that's fungible is like pretty much like real money. So if I buy 1 Bitcoin and sell 1 Bitcoin, it's going to be the same. It doesn't matter where I bought that Bitcoin. Okay, it's going to be just like $100 note that I'm giving you today, or you're giving me. Okay, it doesn't matter. It's like where that $100 notes come from, which one of the particular $100 notes that are out there that we're using. They're all fungible. They're all exactly the same. And it's like non-fungible tokens are like the complete opposite of that. Every one of them is totally unique. Okay, so it's a bit like collecting art, and that's where the space is like blowing up at the moment. But there's lots of opportunities for things that are unique, that are not necessarily pieces of art. That could be like a stock certificate. So let's just say you've bought some Tesla stocks. The stock market's most probably eventually going to go into the blockchain, and those Tesla stocks, so each one of them is unique to a certain extent, because they're tied to a particular owner.
Oh, I see. Okay.
It's like certificates are another example. So you could have like some proof of certification that could be an NFT. But anyway, back to what we got on the screen here. It's like when CryptoKitties first started taking off, it was with something called CryptoKitties. And they were released in 2017, and that was just like a bit similar to the sort of thing we're seeing with Dogecoin and SHIBA Inu. It's just like a bit of a joke and a bit of fun. So people have these CryptoKitties, which are like virtual pets, and they're all NFTs, and it got so popular that it brought the whole Ethereum network down to its knees, and the whole Ethereum network, which is like the second biggest token out there behind Bitcoin, was like, pretty much almost completely unable to function for a couple of days, because all these people were just going crazy over these CryptoKitties and buying them and collecting them.
I just have to interrupt here. It feels like this is part of the beauty of the human spirit, and how we actually want our experience of exchange and trade and sharing the wealth. We want it to be fun. We want it to be a playful experience. Like I just find this fascinating in terms of what it says about human nature.
Like, it is quite fascinating, because the crypto space and technology in general is just like, it's where younger people tend to gravitate. There's older people like us there, but it's all about having fun and just like being irreverent, and it's like
it seems very playful. And like there's not a lot to lose when you're joining up for those small investments. It is a game, but you see how quickly that the flow, like where we put our attention and where we gather collectively around something that we deem has value for us right now, even if that wind of change is going to pass quite quickly, This is an exciting realization to see, especially like you said, with the younger generation.
Yes, and anyway, it's like, and by the way, all these websites that I'm showing on the screen right now, they're going to be shared in the description of this
Link
video.
below. Yeah.
Okay, so don't worry if you can't follow and read everything that's on the screen. We're going to have links to every single one of them for you to look at when you're finished watching the video. And here we go. Here's the Crypto Kitties again when they're trying to explain NFTs on this website. And they're just going through the explanation here like I did before.
Mm-hmm.
But one of the things that's a little bit controversial about the NFTs is it's like this one here. Yeah, I think someone paid several $100,000 for this video here. And what is interesting about this is like anyone can copy an NFT artwork, so it makes it a bit hard to just like understand how people are paying so much money for it. So you can see on the screenshot here, it's like they got download video as, so someone's actually able to download this video that someone's paid a lot of money for and actually have a look at it themselves. And that's one of the things that's, you know, it's like it's a bit awkward about this whole space. But one of the things I could see happening is like when people
I just want to stop you for a minute because I'm trying to relate this to my old world understanding of these concepts. So it's kind of like what you're saying is these non-fungible coins are traced or valued based on a kind of provenance. Is that right? Like how you trace their origin and pieces
of artwork, but because these are digital pieces of art,
then they can't.
It's not like buying a physical Van Gogh or Monet or something like that. It's just like, it's like you own that physically. No one else can have that except you. Because this is digital, people can just download the same thing that you paid like hundreds of thousands of dollars for, like we're seeing in the screenshot here, and also have that copy for free themselves.
Wow.
Okay, so that's where it's getting a little bit. So a lot of people are doing that, and that's where a lot of people think it's like, oh, NFTs, they're a flash in the pan, they're not worth worrying about. It's all just a fad. But where I see this type of artwork in particular going is it's like there'll be licenses associated with this NFT. So let's just say I decided to download this video that we have on the screen now, just like they're illustrating to us here in the screenshot in this web page, and play it right now. The way I see NFTs going, there'll be copyright associated with it. So if I decided to play this video during our interview here today, we could possibly get sued for copyright. Okay, so
then the person that paid all of that amount for it is going to own their copyright.
We could ask the people that have done, the person that's done this artwork, hey, can we have permission to you know, put this up in our interview? And they could say, yeah, fine, that'll be a $500 licensing fee.
Yeah, I get it. Okay, I got it. I understand.
So I think they're deliberately just letting it be the Wild West at the moment and have people just go out there and just steal whatever they want. So people just think, oh yeah, I've just got a $300,000 piece of artwork for free. But eventually I see it being a lot more heavily enforced, and you know, it's like if I wanted to just like look at this artwork, download this artwork, share this artwork with other people, then I have to pay the original artist a license fee. You know, it's like
got it. Okay.
So now one of the other so NFT is still a big current trend right now. It's like they're starting to cool down as well, but the next area that I see is a future trend, and it's not necessarily a good investment trend in the short term, and maybe even possibly the medium term, because what we have going on here, we have a situation where governments are not liking how crypto is moving towards much more towards privacy, and also it's like the blockchain. It's like a lot of people in the blockchain space are becoming much more anti-censorship, and they're trying to build a new internet on top of the blockchain, which is going to be much more censorship proof.
Right.
Okay, and that makes it harder for any governments or major corporations that would like to keep controlling the narrative, and also controlling how we spend our money. And I might just move on to the next screenshot. Oh, hold on. So there was a couple of things I missed for NFTs. So one of the things I forgot to mention is like one of the other things we can use NFTs for is for domain names.
Okay.
Okay, so you can buy a domain name from Unstoppable Domains, for example, and it's yours forever. Okay, you
I
don't
was
have
just going to say permanent license. That's great.
Yeah, it's a permanent license, and it's yours to do whatever you want with. And if you come up with a good name,
you could sell that down the road if you decided to. Yeah.
Yep. So if you come with a good name and someone else wants to buy it and they're willing to pay a lot of money for it, then you don't have to go through the normal channels to like sell it. You can just sell it directly yourself.
Okay, got it.
And this is related to, it's like a little bit towards what I'm talking about here with the privacy issues that governments are not liking. And this particular article goes into it a lot more. I won't go into that much more today, but I'd recommend having a look at this link and see what this article is talking about. It's talking about some key actors in this space. So that's the Treasury Department and the IRS, and and the ones that these government departments are going against, cryptocurrencies like Zcash, Monero. It's like a secret foundation. And
and this article's from Forbes, right? I see that.
Yes, it's from Forbes, yeah. So it's a pretty mainstream article. Now, while there's some there's some reasons why the establishment wouldn't like secrecy, there are some very good reasons that the establishment might want to reconsider their position. And one of these areas that's where they might want to reconsider the position is like, when they're investing, it's like when you have a hedge fund, or a big bank starting to invest in this space, they need to be able to protect their profits, not just for themselves, but for their clients. And one of the things that I'm excited about in this space is a new privacy-based stablecoin called Shade, which I might talk about later. But in this screenshot here, we're looking at a video of the secret network and how they are it's like protecting an investor from something called front running. Okay, so so most of the decentralized exchanges I was talking about, they have like an order book. Okay, so let's just say I want to swap 100 Ethereum for 20,000 SHIBA Inu. When I put that order in, that order's visible to anyone who's looking at the blockchain. Okay, and we've got this little guy down the bottom here in purple. He's the bad guy. Bob in black there, he's the good guy. He wants to buy a whole bunch of ETH for $1. Okay, but this front runner is seeing what's going on, and he's seeing that Bob wants to buy it at that price, and he actually snaps up that same sale from underneath Bob because he's paying more gas.
So he's basically put 2 cents on top. He's put 2 cents on top, and he's taken the sale. Is that?
Yeah. Well, let me just explain this a bit more clearly. So when you put an order in on the blockchain, you have to pay a fee, and that fee is called gas. All right. Yeah. Now you can pay a little, or you can pay like what's considered to be the average, or you can pay a lot. The more you pay, the quicker your transaction will be processed. Okay. So what this front runner's done is looked and see what Bob wants to buy and how much he wants to pay, and he's ended up paying more gas than Bob. So Bob's paid 10 guai, all right? And even though the front runner has put his order in after Bob, because he's paid 19 guai, he is got
there faster.
He's got there faster than Bob, and poor old Bob's missed out on the ETH that he wanted to buy for $1. And so what this front runner's done, he's put that same ETH back up on the market for $1.02. And because there's no orders left for $1 anymore, Bob's got no choice but to buy it at $1.02 instead of $1, because that's the cheapest one that's available.
Oh my gosh.
All right, and that's because the blockchain is public and it's not secret. And that's why something like secret, which is like Ethereum, but it's all totally private, is very important. Okay, and especially to, like you mentioned, you're a major hedge fund, you're dealing with billions of dollars in your portfolio, or you're a bank, and or it's like a 401k, and you're investing on behalf of your clients, and this happens to you. Okay, but instead of
it's not 2 cents, it's like 20 grand or something. Millions, perhaps even billions of dollars. It's like
lost that it's like shouldn't have been lost in the first place. So
I get it.
So that's why privacy is a very, very important trend going forward. There's also the issues with the IRS and all that sort of stuff. Not being able to track what people are doing, but it's like when it comes to investing in general, privacy is very, very important. And I'm going to get back onto that subject shortly, but I'm just going to jump across to another area of privacy, which is quite interesting, and that's when it comes to VPNs. All right, so everyone's heard of, well, most people have heard of virtual private networks, or VPNs, and that's when you're trying to keep yourself anonymous on the internet. And just to say, I want to visit a website in Canada, and it's a Canadian TV station, and because I'm in Australia, I can't see it, okay, because they have it geo-blocked and make so it's only Canadian viewers that are able to watch that TV station. With a VPN, I can pretend that I'm actually coming from Canada, and I'll look like I'm actually coming to Canada from the TV station's website, and they'll let me in. I'll be able to watch whatever it is that I want to watch, as well as being kept more secure and a bit more anonymous. Now, one of the areas that is quite interesting about blockchain, they now have decentralized VPNs. Okay, so these are VPNs that are run on the blockchain, and the good thing about them, they are a lot more private than VPNs. So there's this myth. Okay, if I use a VPN, I'm private. My ISP can't see where I'm going on the internet, and they can't track what I'm doing. But really, ultimately, you're just relying on the goodwill of the VPN provider not to keep logs and to sell those logs off to marketing companies or to any governments that might want to put a request in for information about people. These decentralized VPNs don't store that type of information permanently, like an ordinary VPN does. And it's like this one here that I'm looking at right now, Mysterium VPN. That's actually a working product that people can actually go out and use right now. It's something I've been testing myself for a while, and I found it to be very, very reliable and very good. And I've also been running a node as well, where I can see how true it is. It's about what they're saying about the records not being stored. And while they do store some records temporarily, there's no permanent record of what people are doing when they're using my particular computer as a VPN. So when I'm running a node, I'm doing the opposite of what people normally do with a VPN. I'm allowing people to use my internet connection as a connection. So someone in Africa or Europe or Asia or something like that, they can pretend to be coming from Australia when they're using my computer to get the internet connection. And that's nothing that's interesting about these blockchain VPNs. They allow anyone in the world to become a node, and we don't have to rely on big centralized servers to allow people to use a VPN when we're doing it via the blockchain.
Are there dangers to that style as well?
Sorry?
Are there, I mean, I often get into this headspace, and I don't want to be the devil's advocate necessarily, but I just think, how can we ever know for sure how private these things are?
Well,
and
that's the good thing about the blockchain,
makes...
because and like I was saying before, I was actually watching the logs coming through when I was running as a node to allow other people to use my connection as their VPNs. And I could see that I can actually go through the logs and see what's being stored, and nothing's being stored permanently, which is great.
Okay,
exactly how
so
VPN should be run.
you can
Yeah.
monitor that yourself.
Yeah.
Okay, got it.
Yeah. Yeah. So, but only if you're allowing your connection to be used, and also you get paid, not much, but you get paid to allow your connection to be used as a VPN by other people on the network. And also, obviously, I've done the opposite. I've been a customer as well as I've been a client as well as a host.
Right.
Now, another VPN which is quite interesting is one called Sentinel, and that's more mobile based than what Mysterium is. And that allows you to use a VPN on your mobile phone. Okay, so you can keep your connection secure on a mobile phone. And one of the things that I like about VPNs, it's very handy when you're trying to do stuff, when you're trying to do trades and stuff like that on the blockchain, because you're keeping yourself a bit more anonymous and private, and it's a bit harder for hackers to see what's going on, and they're actually doing a trade right now because they're not seeing your normal internet address. Okay, it's like they're just seeing something completely random from somewhere else in the world. And one of the things you could do with the Sentinel mobile version is you can actually turn your phone into a hotspot, have the VPN running. So if let's just say you got a laptop, you're traveling, you want to do a trade, you can you can hook up your phone as a hotspot and do it that way. But you can also have the added security of having a VPN running at the same time on your phone.
Wow. Okay. Yes. Interesting.
Or if you don't have a VPN, if you don't have any data on your phone, you're at the airport lounge, okay, and you want to do a trade at the airport lounge, because those types of when you're doing Wi-Fi in those type of spaces, like an airport or an internet cafe or a cafe, your information is publicly visible to everyone around you. But if you put something like the central VPN on, while you actually looking at stuff on the internet, other people can't hack into your connection and see what you're doing. So
lovely. I love it.
Yeah. So okay, now back to secret again. Now, unfortunately, there's some copyright issues with the music here, so I'm going to have to do it without the sound. We're just going to do it with the closed captions. We're just going to lose its comedic effect.
And you can,
it's quite a funny video.
You can actually go to this fellow's what is his name?
His name's CTO Larson. He's going to be linked down the bottom, along with the other links that we've been showing today.
I watched it, and his sense of humor is priceless, and just like really poignant to the point. So
and he explains why privacy is so important, and he's also he's talking about the secret network, which we were talking about before. And we'll just let this go for a minute and a half, and just, if you're listening to us right now, you're not actually watching the screen, I'd recommend putting the screen on so you can actually see the subtitles, because like I was saying before, we can't play the audio due to music and copyright issues.
Can you enlarge that, Marco?
Yeah, I'll make that full screen. Yeah, that's a good idea.
Yeah.
All right, and I'm just going to hit play now, and just if you're not looking at the screen now, please have a look down and just follow along with the subtitles, because this guy explains where the establishment wants to take cryptocurrencies in the space of a minute and a half, and he does it very well. This is something that most people would normally take at least half an hour or an hour to explain to you, but he does it in a minute and a half, and he does it very succinctly and very well. So I'm just going to hit play now.
Thanks. Hmm. Mhm.
All right. So
Yeah.
he explains it very, very well, and it's like the crypto community has been aware that this is how the establishment wants to steer things for a long time. They eventually want us to move to something called central bank digital currencies. So every country will have their own version of Bitcoin. It's going to be issued by the government. And what they want to do is eliminate cash and just have everyone do all their like normal like finance through a central bank digital currency, which the government controls, and they can pretty much decide what you buy or sell.
Yes. Now, I just want to jump in here for a second, Marco, because I'm guessing that for now, it serves that agenda all right to keep us all, getting interested in crypto, just to sort of create, to
That's
smooth
exactly
the
right.
pathway
Yep.
towards that goal, right? Like, so for
Yep.
now, they're going to let us play around. And
Exactly. That's what
especially they would likely really promote the game playing aspect of those little coins that you're talking about. Like, they want us to all get really familiar with this concept, basically.
Yes, they do.
Cryptocurrency.
And it's exactly how the internet started. So it was like 10, 20 years ago, you could jump on the computer and see anything you wanted to see, pretty much. Okay. It's like nothing was censored. Especially if you write into conspiracy theories and stuff like that. There are quite a few conspiracy facts that were thrown into the mix as well, which they're trying to suppress now as well. And the whole idea is just
well,
like
they're either trying to suppress or they're confusing with
Yeah.
false flag stuff. And
but they start off with freedom. They give us all the freedom that we need and want to begin with, and it makes it very fun and interesting to deal with. And then they start doing what they really want to do. So so I can see now, well, there's all the censorship happening on social media, and they're starting to like show their true colors. But I think crypto is going to go the same way that it's like the internet's been going. People just aren't putting up with it. They're going onto alternative platforms and they're just having a look around there instead. And they're finding other ways to share information that are outside of the mainstream platforms. So, so it's like I think Dan, I think it might be a good idea for the audience to go back and have a look at what Dan's been talking about in his previous video, because I'm pretty sure he covers that with you, Ashala. I haven't watched it, but
yeah, he does, and he's coming back on shortly, so there'll be more of that to come. Yeah.
So yeah, definitely have a look at Dan's past video and his future upcoming one, and there'll be some good information there about social media alternatives and stuff like that. Now, where we're we going to next? Okay, so so we looked at it's like the past, current, and future trends. So DeFi's, well, still, I suppose, still current, but as far as
just to clarify, what DeFi stands for is decentralized finance. Is that right?
Exactly. Yep, that's right. Thank you.
Okay.
And NFTs is like one that's still quite current. That's non-fungible tokens, so that's like collectibles, for lack of a better word.
Okay.
And we've got the future trend of privacy, which we've been talking about with secret network, which is like a Ethereum, but it's totally private, and decentralized VPNs, and it's like unstoppable domains, which is sort of like a combination of the two. It's an NFT, but it's also helps us create a censorship-proof internet. Okay, because no one can take your domain away from you, so it's on the blockchain permanently.
Yeah.
And now we're going to get into the basics of DeFi, and
okay.
Really the two main types of DeFi that people are investing in right now, and that's one of them is called staking, and the other one's called liquidity mining.
Mm-hmm.
And it's like we have some links here that people can look at later. But one of the things you'll see when you go to when you look at like the interest rates for staking and for liquidity mining, you'll see either APR being mentioned or APY. So
okay.
as you can see on the screen here, APR represents the annual rate charged for earning or borrowing money, and APY takes into account compounding. Okay, but APR doesn't, okay. And that's pretty much the main difference between the two. So if you see APR or APY, it's like this would be a good page to come back and have a look at, and just try and just like understand what the difference is between the two.
Okay.
And APY is short for annual percentage yield, and APR is short for annual percentage rate.
Okay.
And it's like there are a few, like I said before, CoinMarketCap and CoinGecko are two good places to have a look at what's going on in this space. And if we want to have a look at how certain liquidity mining or staking platforms are going, we can have a look at some liquidity mining pairs like we're seeing on the screen here, and it gives us some examples of what the interest rates could possibly be, how much is currently being invested in that particular pairing. And there's something that's talked about quite a lot in liquidity mining, which is called an impermanent loss. And the reason why they call it an impermanent loss is because it's not actually a loss until you actually take your money out. So,
right. Would you please just backtrack a little bit and give us the very basics of staking and liquidity mining, Marco?
Yeah. Okay. Yes, I'll get into that right now. But also, yeah. So once again, just have a look at these pages after I've explained that. If you want to have a look at that, you can have a look at that later. But I'll just jump back into staking first. And right now, I'm inside of a wallet called Kepler. It's a website-based wallet, and we can do staking on here. And pretty much the main difference between staking and liquidity mining is with staking, you're loaning out your token that you're investing in, and you're getting paid back in that same token. So let's just say we're staking Osmosis, which we can see here is currently getting 123% a year.
Okay. Yep.
It's like, and that can actually go down over time as well, but that's the current rate right as it stands right now. When we stake Osmosis, that 123% interest is paid back to us in that same token of Osmosis. Okay, and we can see Secret Network, which we spoke about before, it's got 30%, and Cosmos is getting 11%.
So the people that are going to be interested in borrowing from us are ones that want to basically trade.
Well,
is that right?
Well, with staking, it's not really so much borrowing. That's more liquidity mining. But what's going on here with staking? Everyone's heard about Bitcoin and how everyone's complaining about how it's bad for the environment, and because the way Bitcoin works, it uses something called proof of work. So it needs to calculate maths to mine a Bitcoin, and that takes a lot of computing power and a lot of electricity. And yeah, there's so much electricity being used mining Bitcoin. It's like people looking for a different way to like mine that's is like a bit better for the earth and doesn't require super powerful computers to do it. So instead of it's like doing proof of work, this is something called proof of stake, which is what staking is all about. So really what you're doing is like you're putting a whole bunch of your own tokens on a node, which is like a server that's validating transactions and mining tokens. And what you're doing is like you're betting more or less that the person that's running that particular computer server that's validating and mining these tokens is going to be doing the right thing and not doing anything dodgy. If they do something bad, then what happens is something called slashing, where you lose some of your tokens, or in some cases, maybe even all of your tokens, depending how bad things are done on it. Okay, so that's where the risk is, and that's the whole idea of staking. You're staking your reputation in a financial way, that this particular node is going to be doing the right thing. And
then just for the privilege of you doing that, you earn a commission.
Yeah, so there's going to be transactions coming through this particular node. So, okay, so
it's that confidence building thing we were talking about last interview, where if you've got all these people that have staked in that currency, it creates more of a confidence, which makes more people want to purchase it. So for the responsibility they've taken to put that their confidence, their vote of confidence in, they're going to get paid.
Yeah.
But if things go bad, they're going to lose what they've staked.
And it doesn't necessarily have to be anything unethical. It could just be a badly run node. Okay, so someone who doesn't know much about computers, they might decide to start running their own node, and it keeps crashing all the time. Okay, and it keeps going offline all the time, and that would cause slashing to occur because they don't want to have unreliable computers on the network. All right, so so if you don't know what you're doing in this space and you want to try and run a server yourself, it's not really the sort of thing that amateurs could get involved with. But what you can do is like you can take advantage of someone else's knowledge and just stake your own token on that particular node. Okay, and you get a share of the transaction.
You'd want to have quite a bit of confidence in the node that you're staking on.
That's exactly right. Yeah. And we might have a look at osmosis here. So if we click on the side here, I can open up osmosis and I can see some of these nodes that I'm talking about. All right.
Okay. Yeah.
Now, we saw Sentinel before. That's a dVPN, but Sentinel also have a project where they're staking Osmo. And we can see that they take a 5% commission. So let's just say it's like we've got that 120% interest or whatever it was that we're talking about. It actually ended up being 115% over the course of a year.
Okay. And
we can look at these ones and just research them a little bit and find out what people are saying about them. So people might like Cosmo Station, for example, and if you do a bit of research, and you can find out just like who's behind that and whether they're the type of people that you'd like to get involved with. And what you do is like, let's just say we've got 1,000 Osmo sitting in our wallet here. We just go to manage and we delegate 1,000 Osmo. Okay. Now, one thing that's important to understand about staking is that there is a unbonding period or an unstaking period, and that's usually 21 days. So your money is locked up for 3 weeks. Okay, so if I hit undelegate now because I want to take my money out, I've got to wait 3 weeks before I can actually take it out of my wallet and turn it into cash or something like that.
Okay. Okay, so it takes 3 weeks to get on there, or 3 weeks to get off?
Sorry, to get on it's instant. Okay, but to get off is 3 weeks.
It's 3 weeks. Okay, got it. Okay. Great, thank you.
So that's one of the disadvantages of staking. It is a bit. It's like the rewards are also. I don't know whether risk is the right word, but as far as profit taking is concerned, or profit loss is concerned, you get the whole effect of it. Okay, so let's just say Osmo crashes down. Okay, it's like even though you might still be getting 100%, it might be 100% of $100 instead of the initial $1,000 that you put in. Okay, or if the reverse happens and that $1,000 worth of Osmo that you purchased turns into 100,000, then you got to get interest, 100% interest on that 100,000. Okay, so
cool.
So it's much bigger rewards and much better risks associated with staking.
Okay.
Now, if we get into liquidity mining, that's similar in the sense that you're locking up your tokens, but where it's different is you're actually staking a pair of tokens. Okay, so you could be Ethereum and SHIBA Inu, for example, that you could be liquidity mining. And what you're doing is you're offering liquidity to the market. And the reason why that is important, let's just say you're an investor, okay? Let's just say you want to invest $1 million in a token today, okay? But there's only $100,000 worth of tokens available in the market. The liquidity is not there for you to buy what you want. And because it's not there, if you try and buy $1 million worth, you're going to push the price through the roof, and it's going to end up costing you a lot more to buy the tokens at the price that you wanted to buy. And also the reverse, if you want to sell $1 million worth of token, but there's only 100,000 people willing to buy, okay, that's a big liquidity problem as well. And
yes, I see what you're saying.
Yeah, so what this liquidity mining does, you're supplying that liquidity that's needed for the market, and people, that's one of the things investors will look at. They'll look at it's like how much is available. It's like I'm a big hedge fund, for example, or a big bank again, and I want to invest a lot of money. Okay, the first thing I'm going to be looking at is liquidity. How much can I buy? How much can I sell? And what you're doing is like, you can be a small investor. You can put maybe $100 in, okay, and liquidity mine that. You don't have to be rich to liquidity mine. What you're doing is you're buying those tokens to an exchange, and they're using those tokens to it's like buy or sell out of that trading pair.
Okay.
All right, and you get a cut of the transaction fees. That's where the interest rate comes.
All right.
Okay, so we got what do we have here? So we have Dash.
So when if you put in like for this liquidity, then what you have put up that you want to use as your purchasing coin is now being used on the market. Is that correct?
That's right. You're allowing traders to use your pair to trade in and out of. Okay, and if enough people do it, then there is $1 million worth of tokens to just like either buy or sell instantly. Okay, and you're getting a cut of the transaction fees involved with that. Okay, that's
and then you also get notified when there's enough for you to make your transaction. Is that right? How does that work? Because let's say you're wanting to buy, like you said, there isn't enough of the enough liquidity in the coin that you want, but when there is, you would be notified so you could complete that transaction. Is that how it works?
No, there's no notification. So as far as investors are concerned, okay, so these are people that just want to swap a whole bunch of tokens for another token. They can just go on CoinMarketCap or CoinGecko, and they can see the liquidity in the market straight away. And then they can see whether it's a worthwhile project for them to invest in. And if they're happy with the amount of liquidities there, then they'll jump right in. If they're not, they'll just avoid that coin or token like the plague. Now, one of the things that's good about liquidity mining is like a lot of the liquidity pools have what's called a day-on bonding or unstaking. Okay, so if we're looking at the screen here, we can see that that does seriously affect the interest rate though. So if we're willing to wait 2 weeks to unlock our tokens so we can spend them again, we get a much higher interest rate. But if we want to be in a situation where we only have to wait 24 hours to get our money back, then we can do that, but we get a much lower interest rate for that privilege.
Got it.
Okay. Now, one of the things that I was talking about before, which was an impermanent loss, it's a bit of a misnomer because it is a permanent loss if you pull your money out at the wrong time. So let's say I put in $400 worth of Atom and Osmo. So that's $200 worth of Atom and $200 Osmo. So we have a perfect trading pair in place here. If Atom and Osmo crash, then that $400 could be worth $200. Okay, and if I pull my money out now, it's actually a permanent loss. But the reason why they call it an impermanent loss is if I leave my money there, then usually, even if the price doesn't ever get back to where it was before, I'll still make enough money in transaction.
On your transaction fees, yeah.
To actually be made whole again eventually.
Okay.
And another downside to liquidity mining is if there's a huge upswing in the market for Atom and Osmo, I won't get the full reward out of it because I'm not going to get paid in Atom or Osmo when I'm staking. It's like usually when you're liquidity mining, you get paid in the DeFi platform's own token. All right, so when I get paid interest, okay, with osmosis is actually Osmo, but if I go back to another pool, okay, let's just say I wanted to just like do, that's Osmo as well. Yeah, let's just say I wanted to get into this pool, okay? So none of these tokens are Osmo, but that's how I'm going to be paid in my interest.
Oh, I see. Okay.
All right, so so that's nothing to take into consideration. So if the market does really well for these two tokens, I'm not going to be benefiting from that because I'm not getting paid in that. Whereas in staking, if I was staking Atom or staking,
you're going to get paid in that.
And that same token. So I'm going to get this compounding effect, which I'm not going to get in liquidity mining.
Okay. So there's pluses and minuses to both of those options.
That's right. And it's people are doing that because while it is risky, it's not as risky as trying to figure out how to trade and time the top and bottom of the market, because you obviously want to buy low and sell high. But yeah, people that do trading will tell you that can be a pretty tricky thing to do. And last of all, I'm just going to have a look at one last DeFi platform called CurveFi. Okay, and what you can do here is you can actually stake something called a stable coin. Okay, so what a stable coin is, it's a coin that has a value that's consistent and persistent. So we've got this one here, SUSD, that's tied to the US dollar. Okay.
Oh, okay.
Right, and it's always tied to the US dollar. So if the US dollar is like, so you're also not subject to the swings that you get in other cryptocurrencies, because the swings can be very wild. You can see like 10-20% gains or losses in a day. Okay. And obviously you don't want to be a victim to any losses that your token might be or your coin might be experiencing. So if you invest in a stable coin, then you're not going to have those wild swings, but you also have the added advantage of staking. It's like stable coins and doing liquidity mining that way. Okay. And that's something that's quite interesting as well. I think we've covered enough of the DeFi basics there.
Awesome.
But what I'd like to get into is like stable coins a bit more, because that's quite an interesting subject. So so once again, all these links that I've got on the screen, they're going to be in the description. So if you feel that I haven't gone into it enough for you, just go back and have a look at the description. You'll be able to click on the links and take your time to look at these pages yourself.
Yeah, and thanks for hanging in there, folks. This is
it's pretty full on. Yeah,
it's pretty full on. It's a lot of like heady stuff. However, you can pause the recording, come back to it later, and it's definitely, we've still got some awesome topics to cover.
Yeah.
So yeah,
how are we going for time?
I feel like we've got about another 15 minutes or so, 20 minutes maybe.
All right, we'll see how we go. I won't be able to cover everything today. But anyway, this Wikipedia page does a good job of explaining stable coins. So they can be backed by a commodity. Okay, so let's just say oil, for example, backed by the price of oil. It can be backed by, okay, or hemp, which is obviously a bit better for the environment than what oil is. Fiat currency, when they say fiat, they mean like an Australian dollar or a Canadian dollar or a US dollar or a British pound or whatever, French franc. they can also be backed by other cryptocurrencies. So sometimes they're a basket of cryptos, okay, and the average price of those cryptos. But this page goes into it a lot more, and that's something I recommend having a look at. Okay, so, so for example, if you're a charity and you want to invest in this space, then what I'd most probably tell that charity, I'd most probably tell them, hey, invest in stable coins and maybe do liquidity mining for that. And that's going to be better for the charity, because you're not going to, while you might not get the rewards, you're not risking any of your donors' money anywhere near as much.
Very, very informative. Yeah, that's very helpful.
And
also for the very conservative players, right?
Yes, but also let's just say the same charities, like you know, they're doing a bit of liquidity mining, and they want to they need to like go out and buy stuff for the charity. They can actually get a crypto credit card, okay, and tie and like and the tokens that are generated by the liquidity mining or by their staking. They can send that off to their crypto credit card, and they can actually buy it in their own local currencies. Let's just say we have a Canadian charity. Okay, they just fill up their crypto credit card with SHIBA Inu, for example. Okay, and they just go down and they buy a whole bunch of stuff that the charity needs. Let's just say they need to buy a new car or a new delivery van for the charity. Okay, they can just use this crypto credit card to purchase that. And the person that is getting paid by this credit card, they'll just get Canadian dollars. They won't know what's happened at all, but there could have been a whole bunch of SHIBA Inu that was used to fund that particular credit card.
Okay, hold on a minute. Back up for a sec. So what you're saying is these crypto credit cards, I'm very interested in knowing more about this, are actually function like a regular credit card.
Yeah. Yeah, and maybe SHIBA Inu is most probably not the best example for a charity. Charity would do something more conservative. They would most probably throw a whole bunch of stable coins on there.
Yes, exactly, exactly. Which is probably what they would have invested in anyway.
Yeah, but for the average person, they might take a lot more risk, and they might put SHIBA Inu or whatever they're investing in at the time. They can fill up their credit card with a few $100s or a few $1,000s worth of those particular cryptocurrencies. Okay, and whatever that crypto is worth in Canadian currency at the time is what you have available to spend.
Okay, now this leads me to something else that I think you've referred to before, and I feel like it's important to know. So when the charity is either paid in cryptocurrency and trades it into a stable currency, and then does liquidity mining with that, all of that is basically private information, like the IRS or whatever, the revenue service.
No, that's only if they're investing in something like SCRT, and SCRT is going to have a private stable coin coming out soon called Shade.
Okay, so back up a little bit then. So as soon as you invest in any crypto, there's going to be the revenue service of your country is going to be notified about that.
Yes. Thank you, Ashala. That's a very important point that people need to understand. It's like, while we're talking about privacy and stuff a lot today, generally speaking, the blockchain space is not fully private yet. Okay, so governments can track and see what you're doing on the blockchain. Usually they don't worry about trading too much, but they can track what you're doing there. So in Australia, if I trade a whole bunch of SCRT for a whole bunch of Osmo and I make a huge capital gain, the government do want to have a cut of that capital gain. Whether they're tracking that or not fully yet, I don't know, but they could be. But they are definitely tracking when you're cashing out at it.
Well, that's what I was going to say. So, for example, that now when they spend that money on the crypto credit card, that's going to show up as a transaction that is traceable.
Not just crypto credit cards, but also, let's just say we have $1 million worth of SHIBA Inu because we did really well in the market, and we're going to a Canadian exchange, and that exchange puts it all into Canadian dollars for us, and we send it to our bank account. Obviously, the governments are watching that, and that's where you definitely most probably would get caught out if you decided to be a bit naughty and not pay your tax. Okay,
got it. Great.
No.
On to the next subject. Glad we clarified that.
Yes, that is important to understand. So it's getting to the point where one of the things that's great about this as well, let's just say one of the biggest problems in the third world and the developing world is there's a lot of people that don't have access to bank accounts at all.
Yes.
All right. So this would be really helpful to someone in one of those countries that can't easily get access to a bank. If they come up with an idea or a business that's making a reasonable amount of money, they can start buying stuff from overseas, okay, without needing a bank account. They just use a crypto credit card. And all they need to get a crypto credit card is to supply a government ID like a passport or a driver's license.
Okay.
As long as the government issues that sort of stuff at least, and as long as the crypto credit cards happy to accept those citizens from those countries, then they can become banked without needing to have an actual bank.
Awesome.
And it's like most of them, the crypto credit cards are available, have waiting lists right now. So Gemini is one of the ones that have crypto credit cards available, but there's a waiting list. Crypto.com is the biggest one that's out there, and that's the only one that I know of at the moment that doesn't have a waiting list. So if you wanted to jump onto this, and we're not an affiliate of these guys or anything like that, we're not getting paid money to
I was
talk
just
about.
going to say, I want the Gemini crypto card. I'm a Gemini.
Oh, okay.
I'm not saying it's the one to get. I'm just saying that
yeah.
sounds fun for me.
Yeah, but if you wanted to go out and get a crypto credit card today, pretty much this is the only choice at the moment.
Okay,
but going forward, there are going to be a lot more choices. Now, the next subject, where are we going to now? So now, while we're still on the subject of stable coins, the most controversial stable coin out of all of them is one called Tether. Okay, and Tether is tied to the US dollar. Okay, it's tethered to the US dollar. And what's supposed to happen with this particular cryptocurrency? And this is another thing that's important to understand about stable coins in general. They don't necessarily have to be backed by a physical asset. They can just be pegged to the value of that asset. Okay, where Tether's different, is not pegged, it's actually supposed to be backed by physical US dollars. All right, and where Tether is like is gotten quite controversial is they're not allowing themselves to be audited fully. Okay, so they can pretty much print US dollars out of thin air. Okay, without having to back them with physical US dollars, because and that's one of the main reasons why they don't want to be audited, because they don't want people to see that they're actually doing that.
Okay.
And this is not necessarily a good thing for the market, the crypto market in general, because this means we don't know what the true value of the crypto market is, especially the two main ones like Bitcoin and Ethereum, because if you look at the trading pairs for how people are buying those particular two coins, or it's like, well, one's a coin, the other one's a token, is quite often Tether is it's like token of choice to purchase those two particular cryptocurrencies.
Why is that?
Well, it's like, well, that's because it's a great way for the establishment to pump the market, for lack of a better term, because they can just print money out of thin air. It's just like going to the supermarket and buying a Monopoly game and just using that money to spend money in real life. It's just no real value behind it. It's just all fake. And they're just able to pump the market up like crazy. And maybe the true value of Bitcoin might be half of what it actually is. We don't know. This is something that's called price discovery. Okay, in the finance industry, that's a big issue. Is like, what is the true price? How do we discover the true price of something? And it's really hard to get price discovery when there's manipulation happening like this.
Okay.
Okay, and this is the dark side of stablecoins, for lack of a better word. It's like, and yes, Tether's like quite controversial for this reason, because they say that they're actually backed by physical US dollars, but they won't let themselves be audited, so we can see whether that's actually the case. And it goes even further than just the crypto market in general. A lot of people must would have heard of the Evergrande and how they're running into a lot of problems at the moment. Some people believe that the stablecoin Tether actually has a commercial relationship with Evergrande, and they're using that to fund their real estate. It's like purchases. Okay, so in Australia and in Canada in particular, it's like in the US it's BlackRock, which is like a sister company, US sister company to Evergrande. It's like all these, because the price of real estate in Australia and Canada is just going through the roof, and that's because Evergrande is using this fake money to just like go out and purchase these houses for ridiculous prices, and it's making it hard for the ordinary person to get into the market and buy themselves a home.
Oh Lord, this is mind-boggling.
Yes.
Okay, folks, everybody take some deep breaths. Yeah.
But anyway, on to what's going on with the World Economic Forum, which is interesting. They've been running drills on a cyber pandemic. Okay, so that's the viruses on your computer, for lack of a better word. Okay, not viruses in people, like pandemic amongst a digital pandemic amongst computers. So they're infecting each other and causing all sorts of problems. They're doing a drill for this. When they usually do a drill like this, it usually ends up happening in real life a few months later. And one of the things that people are really concerned about with this cyber pandemic drill, one of the things they're talking about is like turning off the power, or just so cryptocurrencies go offline. It's like ordinary banking goes offline.
So cryptocurrency goes offline. Everybody needs to have your hard wallet. What is it called? The hardware wallet.
Hardware wallet or software wallet. As long as you have it in your own possession, it's like you're going to be reasonably safe. That might be a good one to pull some cards on if you don't mind.
You want me to pull cards on whether or not there is going to be a power outage that is apparently associated with this cyber pandemic drill. Okay. I'm doing that right now.
Thank you. I think this could be interesting for the audience to see what the cards would have to say about this.
Okay, well, I've actually been getting this, not this, but I've been getting some insight about this for the last little bit. And once again, once I go into this mode, I often don't really know what I'm talking about. I mean, like, I'm going into areas that I don't understand really well. So if it doesn't make full sense, you can help me like clarify the details. But
no worries, there's no problem.
First of all, I get the sense that there's some in the development of this agenda that want to hurry it up, and there's others that want to wait. So right now, the intention is to kind of, I feel like there's a lot in place for a reset economically based on this. And what they're doing, there's a sense of emotional readiness, like they want there to be a degree of emotional readiness on the part of the general populace. And so it feels like that's what they're working on right now. So basically any sort of promotion / propaganda to help prepare for where they would like this to go afterwards. And I get a feeling that somehow the alternate of this is already well underway. And I'm not really sure what this is, but I guess what I'm sensing is just different grids already, new internet grids established, new new power grids established, new like protections established to prevent the complete collapse. I get that there's already, different from what their agenda is, there's already alternate systems underway, and the longer this is delayed, the more established those alternate systems are.
Okay,
Does
so
that make any sense? Can you translate that in your lingo?
Well, how I see it is like we are in a bit of a it's like the establishment is at war with itself. Most would be a good way to explain this. Okay, and there's good guys and there's bad guys. So there's actually people in the establishment that are on our side. They've been a very small minority for a long time, but that minority has grown to be a lot bigger. And I think what you're talking about here is like these people are aware of this agenda and they're trying to thwart what the mainstream establishment wants to try and do. So,
yeah, well, and I also get, and I don't know what this is about. I don't understand technologically the concept exactly, but I've been seeing this and I'm getting something like mobile, like the word mobile. And so I don't know, is this like a different kind of, like, is this a different kind of internet that isn't based on the same system?
well, that's very interesting.
Is this like satellite connection, or like, because it's making me think of things like satellite phones and like.
Exactly, yeah. So we got Starlink with Elon Musk, which could be what you're thinking of there. But also another thing that I haven't actually seen happening in the real world, but it's such a brilliant idea. I'm really surprised that is at least not happening in secret without the public's knowledge. There was this comedy show, American comedy show called Silicon Valley, which is all about the tech industry. And their last season, they talked about a cryptocurrency that they were developing in the show, which allows you to turn your phone into part of what's called a mesh network. So your phone will communicate with other phones, and then the internet will go through everyone's phones instead of through an ISP.
Yeah, that's kind of what I'm seeing. And honestly, Marco, this is kind of what I'm getting, and what I've been getting is that it's like when you said that analogy of the Wild West, and it's like, it's kind of like the renegade spirit of humanity, and we're like, they're sort of developing all this technology to create this, mass control base or whatever, matrix or whatever you want to call it. But as it's like, it can't get launched seamlessly enough, partially because of their infighting and partially just because of the complexity of the whole arrangement. So as they're like, basically platforms are developing, they're already being sort of like, like basically hijacked by the renegade faction. That's and exactly like, right. We'll do this, we'll turn this into this, and before they know it, it's been squirreled away, and already there's something new happening with it.
And that's what was so funny about CTO Larson's video, because he explains exactly what they wanted to do. But it's like he ends on what they want to do, but he actually starts with what they're against, which is the secret token. That's like the markets are up 100% today for secret because only Colombian drug cartels and criminals like secret. Okay, so it's just being sarcastic, obviously, but that's something for all of us. Because I don't think you'd like it if I could actually get on the internet right now, Ashala, and see how much money you're making every week and where you're spending money. And I don't think I'd like you to see where I'm spending my money. But that's what they could. That's where they wanted.
It's not really that exciting, actually. But I get the concept for sure. And similarly, like, it just because of the nature of the diversity, the unpredictability, even though, like I've said for years, these algorithms and all of this effort to really be able to psychologically create these blueprints of the human psyche, it's like it's shifting all the time. So it's kind of like the wild market of crypto, and the way these little gaming tokens can turn into some massive movement, and like it's just all so organic. and activated. You know, let's end on that spiritual note. So
Yeah, well,
people for other reasons as well, people are wanting this off-grid mobile version of their internet, their satellite phones, and that's just going to get more and more and more. People are wanting to have, you know, everybody wants a generator now, so that if the power does go out, and you see where this is going, like we're going to become more and more autonomous and self-sufficient.
Yeah.
So
now,
boom.
So if we can just go for a minute or two longer, I'll just talk a little bit more about what you're talking about, expand on that a bit more, because you're exactly right. This is where things are heading. But there's a whole bunch of platforms like SIA, Internet Computer, and there's a few others which I don't have time to mention today that are all quite good projects. In a nutshell,
we'll have another interview soon in a couple of weeks, folks.
Yeah.
You're okay with that, Marco?
Yeah, no, I'd love to.
Okay.
But in a nutshell, what they're doing is they're building the next internet on the blockchain, which is going to be censorship proof, okay? And it's going to be a lot more permanent, and it's going to be under the control of the individual a lot more than what it currently is. Because
this is peer-to-peer, right?
Well, not just peer-to-peer, but because anyone can So for example, with Bitcoin, if you have a big enough computer and a fast enough internet connection, you can actually download a whole copy of the Bitcoin blockchain, okay, and have that sitting on your computer, okay, which is what a lot of people have done around the world. And this you don't have to have a server to do this or anything like that. You can just download it and keep a copy on there. And if if the internet goes offline, or it's like there's a blackout for a few days, all these people will have copies of Bitcoin, or of the whole blockchain, and they can get it up and running again. Okay, so there's no permanent damage or failure to the system.
Okay.
Wow. But just one other thing as well, with the cyber pandemic drill, one of the things that people are concerned about is not just blackouts, but also specifically Windows computers, and to a lesser degree the Macs. There could be stuff going on there where people have invested in crypto, and they have it's like hardware wallets and web wallets and desktop wallets on a Windows computer. People really need to make sure that they have their security sorted out there. So I don't recommend.
Any recommendations about that?
Well, I'd recommend, it's like if you can afford it, go with a Mac, okay, because they're much less likely to be hit by this sort of thing. If you can't afford to get a Mac, what I'd recommend doing is getting a Linux operating system on your computer, so you don't have to have your whole computer running Linux. You can actually do something called dual booting, where it's like you spend all your time doing your normal stuff inside of Windows, and then you can boot out of Windows and into Linux on the same computer and do all your crypto stuff on there.
Awesome. Wonderful. This has been fantastic. Thank you very much, Marco.
Oh,
thank you very much for all your effort in gathering this information. We'll be providing all the links for the all the links for everything that you've discussed and everything that you've shared on the screen below.
There's quite a few of them.
Yeah, totally.
If it might take a few days for you to get through all of them if you're really interested in it. But yeah, it's like we're also going to go back and reboot the previous interview, and instead of just having a black screen where I'm talking, we're going to have it's like web pages up like I have now, and links to those web pages, so people can actually have a look at that as well.
Yeah, and I'll repost that.
Because as you said before, this is a part 2, and it's probably a bit better to start with part 1, so you can have a better understanding of the basics of what we're talking about here. Yeah.
Super. Thank you so much.
That's all right.
We'll be going for part 3 here in the next couple of weeks.
Yes, and yeah, where we might be steering it next time is into more into the area of what what's called rehypothecation, which is what was happening with Tether. So we're talking about how money works, the dark side of money a bit more, and how people can protect themselves against what's happening there, because I think that's very important as well.
I'm really excited about that. Actually, I feel like I can contribute a little bit more once we get into talking about some of the histories and
yeah. And thank you very much for pulling cards on that today, because I think that's it's like very interesting to know, because he gave me a whole bunch of information that I wasn't expecting, and it was very useful.
Wonderful. I'm glad that it helps, and I have been seeing something similar to this as other people have asked similar questions, so I think it's consistent.
Okay.
Awesome. Bye for now, everybody. See you again soon.